All right. Well, welcome traders to the Bookmap Academy meeting. We do this every Thursday, market close. For those of you who are new, the goal here is to give the mic to you guys, to coach and mentor, give some feedback, walk us through some of your trades, and we'll give some feedback. So that's the format that we have here. It's about you, not about us or Bookmap or anything else. It's about your trading. How can we assist you? And building the community. We have a great community over here. A lot of the traders helping out each other. It's critical. Without this kind of feedback and this kind of support, it can be a long road, or a longer road, I should say, to meeting your trading goals. Let me go through the disclosures, and we'll turn it over to the coaches, and we'll start going through a bunch of different things. We have a lot of coaches here today, and a lot of files to go through. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only. It should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, sorry about that over in Discord, sharing my screen now so you guys can see. Let's jump in here. A few announcements beforehand. Next, or let's see, is the 10th of June to the 13th, another competition we're having, this time with partnering with Traders Reality, Tino over there, crypto trader. Win 1 year Global Plus and 1,000 USDT along with it. So if you're interested in that, sign up here. We've got a lot of interest, a lot of people. We'll have some events around it, etc. Trading from the Bookmap chart and managing your trade, etc. Then this summer, wait for it here, coming to a Bookmap Academy near you, Trade with Bookmap. So the idea here in this is that you will trading with Bookmap. You can in the Bookmap Academy, you can earn your subscription for free. And then here's the deal: Academy members and applicants now will get double credits toward their quota for trading from Bookmap and using the Bookmap Trading Journal, this new product we have. I can show it to you here. Hold on just a second, and I'll get it up. Yeah, it's great. We have this new, it's right here, and you can go through by dates, filter. You can make different journals in here. You can look at different instruments, whatever it is you want, and filter your trades. You've got total wins, total losses, biggest winner, biggest loser, profit ratios, average winners, average losers, etc., and more metrics to come. So this is the goal: to trade from the Bookmap chart, get double the credit. Anyone participating also in the Blue Jacket competition that we run every month or it's within the Academy, your posts that include trading data, trading from the Bookmap chart, will get special consideration for the winners. Right, so there's the QR code here. You can take a snapshot on your phone and check it out. But anyway, this is a great thing. We're a little afraid that come the summer months here, that we're gonna, people are busy. Therefore, we're gonna help you out, get double the credit, but you've got to trade from the Bookmap chart. Okay, that's what we're going to go over in the Academy meetings, etc. So we want to see that trade management. When you do that, we can give you so much better feedback, such better feedback. We can talk about not only your trade setup, but we can talk about your trade management. considerations with that. It is critical for us. All right. So yeah, here it is again. Trade with Bookmap and get double your credit. And it's for the Academy as well as the Blue Jacket submissions. Okay. All right. So let's jump in and we'll get into some of the slides here. Or the different traders here. So let's see, is Jack is not in here, right? Correct? Yeah, no, it's not in here. Okay. So let's see. Let's start off with David, and let's see. You've got. Hold on a minute. Go
Sounds
over
a plan, Bruce. Good evening, traders. Hope everyone's well. Enjoying the circus and the casino of the week, etc., etc.
So yeah, why don't you? We'll start with Jonah here, and yeah, take it away.
Yeah, no. Well, first of all, my usual, thanks to everyone for doing their posts, doing their logs, doing their journals, etc., etc. Really appreciate all of you taking the time and really echo what Bruce was saying, being part of the community. And it's nice to be able to, all of us, share ideas, share trades, share lessons, and so forth, and that, and chat throughout the week. I've been talking to or chatting with Laura on some of her posts that I was looking at a week or so ago, and it's just nice to just continue those conversations. So please, not that you necessarily need asking, but continue those on the chat as well. So nice to see a new post coming through here on the chart. So we've got Wild West, as I always like to call NASDAQ. I know, Alan, you like a bit of the NQ and so forth. So good chart. What would be nice to see is perhaps a little bit more of the chart. I took this off Discord, but it'd be nice to perhaps just see a little bit more of the screenshot. My usual thing, I do like to sort of understand what time zone we're in. It's my usual weekly story, Alan, in terms of are we at the open, are we at the lunch, are we at a news event, etc., etc. So that can be good to see. Also, nice to see maybe a bit of context, a bit of zoomed out on a separate chart. I know some of you have been doing really good charts. You sort of put 2 or 3 charts together, so we can just get a bit of feel of how perhaps the day or the days have been going, and also then if there's any sort of news events that have been hitting out. We were just talking before we joined the call. We've all or should have seen that Bostic's been sort of putting a bit of cold water across the idea of a rate cut in July, albeit saying it's not completely off the table, but etc., etc. So it's nice that if you can lay that out, and so to speak. Good entry here. So we can see that the price pulling down. You've got that lovely fat green buy bubble. What we're playing here is failed icebergs and stop runs. It would be nice to perhaps see the subchart. That's if you're using the subchart. Maybe just me. I like to see the subchart detail as well as then the numbers on the chart. But I respect some traders are perhaps trading from a laptop, so they're trying to minimize exactly what they've got on. Really good technique here. The price has pulled up and it pulls back again. I'm gonna ape one of Tom's words, and if he was on the call, he'd say, no, that's not exactly what I mean. But I'm sure we've all heard Tom say about sort of the price coming back and checking on aisle 3 or something like that he likes to talk about. We've seen that the price blips up and it just pulls back. I myself, often on a range chart, I'm looking at a range chart as well as Bookmap, looking at the sort of, I use a 6R chart, and it's okay, I'm just going to wait for it to come back half of that. So that's sort of handle and a half. It's coming back. That's going to be my entry. Now, whether that's a market entry or I'll use a stop entry from a breakout. So really good technique you've got there. We then see the price just sort of scoots away. So a simple trade. What would be nice to see is perhaps a little bit more about your trade management here. Did you move the stop? I can't see the stop being moved on Bookmap here, Bruce, but it might well have been. What were you doing? Were you thinking of scaling in? Perhaps as your trading skills develop, you will be looking to do that. Good placement of the exit there as the liquidity was building up at the 18,360 level, Bruce. We can see up there. So that again, a really nice, simple sort of breakout. There's a lesson here, and that's again on icebergs. Bruce, I'm going to copy what you told us years ago when we started doing this. and that was, it's not a signal service. I don't know if you still use that on your daily on your daily calls, on your webbies and so forth. Today was a classic, certainly for me. If we look at where ES was, and you saw that on NASDAQ as well, there was some very hefty ask ice coming through. I think in total in the first sort of 30 minutes there were 2,500, 3,000 sell ices went through on ES, and the same went through on NASDAQ, and yet the price was pretty much sort of, let's say, going the other way. So it's about looking not just at the ice, the hidden, what's coming off in the MBO, it's looking at the order flow. And this chart screams that big fat green bubble to me is a really good signal, on off you went. So well done. So great charting. As I say, some little things you can probably add to that, and that will really sort of help us understand a little bit more and develop your skills. But I agree with you, a nice low risk entry. Bruce, what would you like to add to that, please?
Yeah, actually I have some kind of piggybacking off of some of your comments there. A lack of, because I like the simplicity of it. I think this is actually really kudos for the simplicity. Um, that can really help understand, like, without all sorts of, like, I'm looking at this, I'm looking at that, whatever. Your criteria here is a failed iceberg, and then a stop run. So iceberg, stop run, absorption, and then entry on a minor pullback, so low risk. So you've got that. You see your stop runs on the way down here. Here you've got your ice in here, also some ice over here, and then it just rockets here back up to the above the 350 swing here. The trade management looks fantastic too. I mean, here's your stop below the swing, your take profit just above the 350 level up here, and that's that. Nice, clean, and clear. I would just say that I would love to see a lot more context here, because to me I don't know if this is a kind of an uptrend. This is kind of a minor pullback, or is this, were we going sideways in here, and then it dropped like this and then it came back up? Because to me, like, I don't just, from looking at the dots and looking at the bars down here, I don't see quite yet this move up. I mean, I do see this buy here, but I could just see it equally be selling here,
Yeah.
and then take it down.
And if I chip across, sorry, Bruce, the 930, which could be the open, but the volume bars doesn't scream as the open. You don't seem to have that big change that we
Right.
would see. So I don't think it's Eastern time, but happy to be slapped and said, no, it is, David.
Yeah. So it just seems kind of, like you said, it seems kind of risky to me. The criteria, you do have criteria. That's great. And first off, is Marco in here? I mean, my God, we didn't open up the mic for him. Uh, anyway, but yeah, don't quite see it, and it worked out. It worked out great, but I just don't see a lot of context. It's just, although it's simple, it'd be great to see more in here. That would be my main point.
Yeah. No, agreed. But nice to see some new charts as well, isn't it?
Yeah, I agree. So Stan, do you have any comments on it?
Um, I think so. Yeah, he can potentially use Map Pro to have a better
Yeah, good point.
understanding of the liquidity. Seems like, yeah, you can't see that much in there, and yeah, I don't know if I would enter on this low volume pullback, or if I would potentially wait a cluster buying just after this pullback to give me more confidence that they are coming back. And but yeah, depends. Yeah, if you have your stats, if it works, keep doing it.
Yeah,
Uh, just, but yeah, all the yeah, all on your side. Huh? Obviously, if you see some strong buyers coming in after the first cluster, might give yeah, it might give you potentially more advantage.
Let's see. I don't know if Marco looked like he was in here, but might be on mobile now under Chris. Yeah, try it. See if you are there. Really nice comment though. Yeah, you're totally right, Stan. I mean, Trader Map Pro is would filter this so much better. Um, so and that will offer more clarity.
Yeah, I think too. But I'm not on NQ, so I will leave Pro to them.
Yeah, you can trade off of it, and it will show up in the trading journal, but only in sim. I don't think it works in the live mode to trade off Mark
No,
Trader Map
no, it
Pro.
won't.
Yeah, yeah. So you'll have to do it maybe in sim or replay mode after. Okay, well let's move on. And good one there. We'll go on to Chen. And if Chen is in here, please request to speak. David, take it away.
Sure. So again, thank you for doing the charting, the posting, and the comments. This went out onto X, Twitter, if I recall. So nice to see that going out to another platform. And I'm saying again, nice to see some equities and stocks. Again, if Jack was with us, he'd be echoing that and so forth. Also, really nice to see a share of a losing trade. We all love sharing the winners and everything else, and marking our own homework, so to speak. So it's nice to share a trade which didn't go quite well. Now, apologies if I've got the interpretation of the colours wrong. I know a lot of traders do like to change the colour of the dots, Bruce, for a variety of reasons. I'm taking the blue-ish dots as buys, and I'm taking the silver grey dots as a sell. So the entry here is for that big fat dot. You can see it, Bruce, in red, where it says enter, and that is a short. So Chen is showing a short going in there. I can understand the logic for going in a short there. You've got a little bit further left. That's the one. Yeah, he's gone short there off that big fat volume coming through, and it is big. If I look to the far left, it's just under 500,000. So it's a hefty number going through on this cap stock. I guess he's trying to play a breakout from here. As he said, the price has gone up. It's gone up hugely. So his mindset, as we all get into, can be, yeah, this is a short. But this is like we were talking about last week. You've got massive selling, and then more selling, also stonking big selling, and yet the price is going up. Price is going up. Now I can't see on the chart at all where the stop was, but the selling and the price is going up. That is a real warning, isn't it, to all of us that, hang on, this isn't quite right. Like I just mentioned about ICE a moment ago at the start of the session today, it's like, this isn't quite right. He stayed in there, and the price goes at 50 cents, which is quite a move. Now, there's not a lot of color or any detail about, let's say, where the stop loss was. The price scoots up to the higher liquidity. He's saying it wasn't filled. I can't really see, not being able to zoom in on a live chart to see at the $2, Bruce, towards the top whether it actually did get filled. But the price went up really, really quickly. It then starts to pull back. You've got, I'm going to exaggerate sort of that sort of failure of lower highs coming through, and then the price has then come back down. Now he's saying he's still holding on to his short, so he's still being optimistic about it. The price comes back down at that sort of 12 noon time, Bruce, and it's back to really where his entry was, or back where the hard selling was. And it's not long before it's having another 50 cent scoot back up towards the $2 mark. He then gets out of it as a loss a little bit lower down. So pretty bold to hold to hold that 50-cent move. Full respect to that, and I'm sure if Jay Trader or Joseph was on the call, he'd be telling us all off for that one, Bruce, for perhaps not keeping the stop so wide. But as a chart, a bit like I've said on the other ones, really be nice to have a bit more context, maybe a zoomed out, so forth. Does rightly talk about there's some news. If you can put that link in when you're posting, that can be very useful and so forth. Again, give it a bit of context as to why. If there's some lessons here, as we all have, is where you are picking up news, whether it's like I was mentioning about Bostic a little bit earlier on, do you want to trade with the news or do you want to trade against the news? Do you want to fade the news or do you want to break out with the news? All those different permutations and so forth. But that's quite a bold trade. I've got to be honest. But hopefully, lessons learned on that, on taking that loss and trying to move that forward. So, as I say in the wrap up before I hand it back to you, Bruce, I wouldn't have been convinced on going short when he did. That is a breakout. I do play breakout trades, as we all do, but when I do, I let the system take over, as I've talked about before. I'll use a stop entry below that to get in, and then the stop loss will get whipped through by Ninja or what I'm using straight away. So at worst case, I'm just covering the broker fees. Bruce, unpack me, please.
Let me unpack. Let me unpack it. So no, not a total agreement. We want to encourage your trading in here, but I think sometimes like it's better to also be, I don't know, maybe a little more kind of like straightforward. This here, like, well, first off, like, why are you trading this? And it's because it's gone up 38 or 380%, right? So, it's already telling you something fundamentally. Now, JTrader, like, I don't know what time I can see the time down here, 9 o'clock, but I don't know what that means in your time zone. But anyway, this thing wants to go higher, and boy, here it could have really rallied, and you really could have gotten hurt. I know there's high liquidity here getting filled all the way up, but there's still more buying pressure. It doesn't matter, especially with these kinds of dollar stocks. Like JTrader, he'll short these, no problem, but he's looking at much higher time frames on liquidity up in these levels up here, where there's bag holders, and then that's where he'll start to look for the short, and he knows that those guys will. It's like, oh God, I can get out, and like look for it to come back down. He also looks at the news of why he would short it, like if this was a drug stock or something, then he would look at what does the news mean? Is it what stage of development is the drug stock, and like is it real news, or is it just pumping the stock type of news? So consider these things in an entry. This is like a squeeze, no doubt about it. And these are the people getting squeezed here. It does trade back down to liquidity down here, and it fails again. And we get another kind of attempt up here, which is rather funny. I mean, it does fail one more time. I think it was good to get out. That's for sure. Take the loss, and then learn from it and move on to the next trade. Now this is all easy for me to say in hindsight, but just some considerations for your setup or your criteria. Why do you want to short? What is the reason? And we're talking more about fundamentals here, bigger picture. Also bigger picture in terms of this 380% surge, etc. Do you want to short this? and have really good straightforward criteria. Else, like, this could have ripped and been up at $4 in a heartbeat, and it would have really hurt. So just some considerations there.
Very true. And if I chip across with NVIDIA, Bruce, I mean, that's a textbook example of where all of us can see, or maybe not all of us can see, how woefully, grossly overvalued that stock is. And we could be looking for the short all day long when it was at $800, $900, $1,000, $1,100, when it's just ripping.
Yeah.
And the order flow shows you it's ripping.
Yeah, exactly. I mean, the context here. So that would be another thing. I mean, we always repeat this, but your context of look for, number one, in your criteria. Number two, number three, number four. Put your list of criteria together. This will be really helpful. It'll keep you from doing this. And if it starts to squeeze, like, just get out, and get out quickly. I know it's not easy. It's kind of a difficult thing to do, but this really could have ripped a lot harder. So that's what I have. Stan, 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 do you have any comments on this? And I guess he's not in here. So
I would potentially say to use the trading stats and build something with MAE, MFE, for example, and even like the time you spent in the trade might give you something potentially. Like you enter this short. I have no idea where you put your stop and where you would take your stop in this case. So yeah, maybe just build, and as you said, Bruce, if it goes against you, try to cut it. Something goes wrong, and make your checklist.
And take a look at JTrader. I know we've said that already. He's fantastic at these, Bruce, isn't he? He really is. Really is. These mid caps, small caps, big caps.
And it's funny too, because, like, you say, like, you ask him, like, how did you get good at this, or how did you get so good at cutting your losses? And he says, from severe pain, and because these things rip, these small caps can be just devastating, and you got to have a pretty strong heart for trading these. Anyway, let's move on to next one, and Stan, you're up. Let's see, we've got you here in oh God, I don't know how to do this.
Just go a little bit above, I think. First pages, and then you should be able to see Vinify. Yeah, perfect. So that's the first one.
Okay.
You can just click on the first picture.
Okay.
That would be good enough.
No, how can I put this in slide mode or anything like this here?
I have no idea. True too.
Maybe just zoom here. Maybe I can just do it here. Yeah, this will work.
I think then just put the Notion link in Bookmap. If it's better for you.
Hey, thank you, Dan.
Amazing.
Excellent. Wow. Okay. All right. So take it away, Stan.
Yeah, perfect. So you can directly go in the in the picture. I find good, like so to see like his checklist. Sorry for the images, but it was through Instagram, and the resolution is not as good as on Discord. So all over. So great to see like the checklist, what you are looking for. You are always looking quite at the same, so very consistent. It's great to see that. Like the way like you highlight the liquidity, the support, so plus the iceberg as confluence. So that's the red rectangle that he highlights. Yeah, exactly. So the liquidity support plus the iceberg and the 200 AMA, yeah, we're acting as a support, but isn't there in this picture. Yeah, and so he wait, I think, for kind of a pullback with a VPI spike. I'm not sure if you hear or not, to maybe have more information about your entry.
Yeah,
But
Vinny,
overall,
is Vinny here? Vinny's hit and miss. I know he has a lot of times been here. I don't
yeah,
see him.
but no worry overall. So yeah, so if you enter with VPI spike, I don't know if it was that. Yeah, that's great. I would obviously, as I said, taking advantage of yeah, the order flow, the short-term liquidity, and how it can react or act just after. So, and it would be great to see obviously the execution through Bookmap. I think that will be one good point in your slides. And we can clearly see, like at this time, the relative volume. I highlighted with the blue rectangle at the bottom, so we can clearly see like we had a huge momentum to the downside, even if we got like firstly, yeah, yeah, some bias that were coming back with a small relative volume. Then sellers came back and he took his entry. I would probably wait if it was me. Wait, maybe like the end, actually the end of the images, like we can clearly see like, yeah, exactly. And plus this cluster. There I might be willing to potentially enter. It gives me like this advantage to, yeah, to enter with those buyers. If it goes against you, yeah, cut it. Make your stats. Know how long you can spend in the trade. How it can help you. I would obviously say it, yeah, maybe Tradermap Pro 2 can help you. So he was trying to, I think, hit like the liquidity target about 50 point above, but not sure if this liquidity was really relevant. It seems like more the algo, so
Yeah.
potentially it will just clearly move away. So yeah, for NQ, any volatile, yeah, active, I would advise to work with Tradermap Pro. What do I have else? So yeah, the execution through Bookmap will really help us and understand how you manage your trades.
Yeah, I don't have any comments more than that. I mean, that was just spot on, Stan. So uh, I just agree. Like waiting, like this isn't telling us quite yet. You know, uh, there is high liquidity. I'm just repeating exactly what you said. There is one thing I can kind of see in here is there's liquidity in here that does fill, and sellers can't take it further. They can't hit this yet, but we don't know. In a heartbeat, it could, right? And then you see the reaction here, like you said, and then maybe like it, it's kind of a quick scalp, like up to, I don't know. I would say more top of the range here, but uh, yeah, I don't really see too much liquidity in these areas here.
Yeah, me either.
David.
Not a lot to add either, really. It's like a skinny pennant or something that drawn out flag, that congested area. As you say, it's well supported. You've got the lows, the highs, lower coming through, and then, as you rightly say, Stan, you've then got that volume picking up and break out. So yeah, repeating your phrase from earlier on, Bruce, very easy to look at the chart and go, yeah, I could have got in here, got in there, but that chart alone, the only trade that really appeals to me, and I'm sorry I keep saying about me, is the initial far left, those V spikes that are really characteristic of NASDAQ, where you get that sharp dash down and then it comes back up, and as I'll often say, that's driven by one of the fangs or something that's doing that, that's pulling it around. So if you're bold, that is a trade to take. But again, for me, I'm using the system, Bruce, to manage my trade. The discretionary is gone in terms of where I'm getting in on that. I use a stop to get in, and I just let the system try and get some handles out of it, and that's it. But that's more of a bit like when we're looking at the stock a little bit earlier on with Chen, more of a punt than a trade, if you take my point.
Yeah, I would agree. I mean, like, not to be too harsh here on this, because like he does have a checklist here, and this is great. And he's marking them up. This is great. I just don't see. I mean, the checklist and what we see in the order flow aren't matching, is what I would say. And it's kind of halfway there, but just consider that, like, when making, for all of us, I mean, like, when you're making your checklist, make sure that it matches. Otherwise the checklist kind of loses its meaning, and you won't be taking a high probability trade. So use the checklist, mark up your charts, but make sure it matches, and then you've got something, and it's worth it to take the risk. Might not work out, but it's worth taking the risk.
Yeah.
All right. Let's see. I think that's that one.
That's it. I think I would maybe just add another thing. Yeah, add a bigger picture. That would be great to have more context. But overall, yeah, that's great to see the consistency. He's posting a lot, always the same. That's great job.
Yeah, yeah, yeah. Nice stuff. And then let's see. Tamatoa, is he in here?
Not sure.
Guys, we'll have to open the discussion for this, but like, Valley Fan, Crash, Robbed, Allen, Rob Davis, DNT, CMJ, Rubicon Trader, Steven, Caesar. We got all these traders in here that come here every week, and we've been covering a lot of your stuff. No doubt. Want to mix it up, but we want to open the mic for you guys. It's really, I mean, we want to hear it from you. That's a major part here of this Bookmap Academy. So otherwise, we're just like blah blah blah. Look at this, and when we get the insight from you, it helps. So I think we're going to try to keep that to a minimum. Maybe kind of change this strategy a bit. So those that are here, we will be covering. Right. So you guys know how it works. We put the spreadsheets together, but and then we divvy them up through the week, and then it's covered. But if people don't show up, like, what's the point? It's way better if we can open the mic for you guys. So I'm sorry about that. We'll get better. Keep coming, and it'll build a much stronger community. Anyway. All right. So we got one more here, Tamatoa. Let's go through it, Stan, and we'll move forward.
Yeah, perfect. So I find really great to see like how he was highlighting the order flow, what he was looking at, like the checklist. So he clearly recognized like the strong buyer did not push the price up at the so couldn't go through the liquidity completely above. Yeah, where the number one is on the chart. Yeah, exactly. Yeah, there. So couldn't go over. I would just say in this case there short-term liquidity above, taking advantage of it. So yeah, couldn't trade through this liquidity. Might give you something. Obviously, as yeah, we we had only NQ book today, so Tradermap Pro for sure. Then good to see like he recognized, yeah, kind of losing conviction, kind of exhaustion on the right side. So yeah, I find that great too. Um, then yeah, that's great for sure to see the execution through Bookmap. So we can say I think the in the blue rectangle, yeah, exactly there. So I think it was a stop order um, where he took it, and I find quite interesting. Like he set it like just below the shot, yeah, the liquidity, and I think what can give him like yeah, kind of a good entry. He get like directly the move, and as we said, if the move doesn't go in your direction, try to, yeah, to cut it. Like we can clearly say like when it goes in your side, just it goes. It's yeah, sometimes just easy. But I think, yeah, try to make your stats about times, MAA, MFE, as you can have in Bookmap trading stats. So that will be a good point. Um, Great to see like where he scale out. So it was BWAP deviation plus where buyers clearly start to coming on the left. So find really great. I would potentially say to have a first scale, but that will depend about the money management, about VPOC plus the liquidity, just above. Yeah, exactly above it. So yeah, we got like the liquidity plus the. I don't
This liquidity stand.
exactly. Yeah, yeah,
Okay.
exactly. So there, I would potentially take a first scale, even if it goes just clearly in your sight. You never know what can happen. Um, I was just wondering too, like, where would you set your stop? I find quite interesting. Like, we don't see a lot of stop order into there, so I don't know if most of you are working with how to say psychological stop, or because actually it's your protection. So when I see like you enter, but you just have you you take profit but no stop, it seems a little bit hard for me. Um, because I think we are not hedge fund too. We cannot keep like the position as long as we want, and we have a defined risk. So I think you should always have a stop because you never know what can happen. Um, and yeah, the that's it. I find good like yeah, for the order flow plus the liquidity. I find it good. I don't know if you have anything to say.
David, any comments?
Yeah, apologies in advance if I'm completely wrong. UTC, that's a European time, so this might be on your time zone here, Stan, and Belgian time. I think this is an ETH chart, if I'm correct.
Yeah,
So the 10 o'clock when action starts getting going, some lovely volume price analysis coming through. You can see the volume picking up. It's a fantastic, it may have not been at the screen at the time, but a great opportunity here to have got long for sure. And this is a big ETH move when you look at the numbers. You know, you've got a 60-70 handle move, if I'm reading that correctly, in non-cash hours, old school sort of thing. It's not long after London's got going, and off it goes. This is, as a broader theme, I know some of you do trade with me on London hours on ETH, but just shows you the moves you can get. This is a perfect Bruce ETH move. You've got a lovely climb up, the price goes up, staggers around a little bit, and as we get towards lunch, then it goes back to where it started. These are the dog walk trades that I'll often talk about with Yuri or Dove, Bruce, so to speak, and him and I spent a fair bit of time sort of picking those apart. Dog walk in terms you walk your dog out your house, but you will walk it back. This is a dog walk trade. No, it's gone up and it's come back down. You've then got to look for the order flow. So what I'm doing when it's gone up, I'm thinking, are we going to go back? Is the dog going to come home? And I'm looking for those signals, and those signals on this chart when the selling picks up just after 12 o'clock. So yeah, great trade. And again, great ETH trade.
Yeah, yeah, agreed. I mean, like, it is kind of weird action, and it's a big move. Like you said.
Non-catch.
I mean, looking at this up here, I'm not really, and then looking at this down here, like I'm still not too convinced yet. I mean, you nailed it, and especially here, like it immediately paid off. You just love those kinds of trades. I don't know. I just see the risk though. I mean, like Stan said, it traded into that liquidity and it still had selling pressure. So that's why it looks like he, got in. But especially NASDAQ, you could have gotten another shoulder in here, like, kind of a bounce like this before, or it could have come all the way back up here, and it could have even kept going up here. How do you know? I know that number 2 here is key. Number 1 and number 2 are key. But for I don't know. I think what is more helpful in order flow for a reversal like this, this is good. High liquidity getting filled,
Yep.
buyers, trading into it. But now we're looking for selling a cluster, and you do have something here, and it did break below the structure here. That's good, but there's still buyers in here, and then rightfully so, he said, okay, it's not making a higher high, and there is some a bit of exhaustion here. There's a lack of buyers compared to some of the other areas. I'm just not convinced yet that it just might go this way for a while. It could do anything. My suggestion is, like, if it is clearer when we have more selling in here, I do like a lot that, like he says in here, like, it can't make the high, can't make the equal high. We're not seeing as many buyers. And then we're making a lower low in here, and we do see some selling. That's all good stuff. It would make me feel a lot less nervous if there was a bit more selling in this area here, and then maybe even a bit more in here, because look at this here. I mean, that's just huge.
Beautiful.
Yeah.
And this, if I remember right, again, happy to be corrected. On that day, Nvidia was just going vertical, a bit like NQ was, because those shares are still, it's non-cash, but those markets are booming in London and Europe. If Moby was with us, what him and I were doing when we used to trade together is our confidence is the DAC, the CAC Current, as well as then looking at the order flow on these charts. So it's looking at multiple markets for those dog walk trades.
Yeah, that's good stuff. I mean, like, I do like what Stan had marked up in terms of liquidity with these blue rectangles. It's pretty nice. I think that's Stan, right? And then I also, Stan, totally agree here, like how this liquidity is a good place to reduce, a beautiful place to reduce risk. Now, in hindsight, it blazed right through it all the way back down to here, which I do like this as an exit, and because I'm waiting for the bounce in NASDAQ. It goes all the way back down to the lows, anyway, I mean, he took out a beautiful chunk here, no question about that. Just trying to give some good feedback. I like what you said, Stan. Like, here, a lot of absorption, but just massive buying pressure. Returns back here. Now they're on the bid. They were on the offer. Now they're on the bid and support. So we could also look at a measured move in here of this equal to this move here. For me, this would be a great area to reduce some risk. I would anticipate a bounce and then a continuation. Didn't get it, but just some thoughts. There's stuff here in the order flow. That would be, I guess, my point. To try to give objective feedback. Okay.
Agree.
Let's see. All right, let's move on. And let's see, who else do we have? Gone through Marco, Jonah. Yeah, we went through him. We went through Chen, and then let's see. So we've got Caesar, and I know he's in here. So let's turn the mic on for him, and then I had Slowdown here. But maybe we'll take a look at some other ones as well. But Caesar, so this is just from yesterday, and I really liked it because of the range bound here that you're looking at. And why don't you just walk us through what you're looking at, some of those decisions you're making, and we'll take it from there.
Sure. Thank you, Bruce. You guys can hear me okay?
Yeah.
Awesome. Yeah, so I started looking more at futures and trading futures this week, and analyzing the order flow. Just there's so much great futures content in here, and I traded options, I traded shares, and the last thing that was left was futures. Do a lot of SPY and QQQ trades, but sometimes the range is just not there that it makes sense. You know, you're sort of looking at like 30 to 50 cents on SPY, you know, so it doesn't give you the return you're looking for with shares. So this was actually very interesting yesterday because it was in the pre-market session that we had a huge move down, and then during the day we had, you know, a sub 20-point range. The majority of the day was spent in here, and then as soon as the market closed, we broke lower. So it was kind of the inverse of what normally happens, where we have the move during the regular hours and just chop during the pre-market session, right? So each time here, or like I put in my commentary, one of the things that used to hurt me the most was trading, not recognizing the kind of day that it was and trading it accordingly, right? When you look at Wyckoff, when you look at VPA, really any auction theory, they talk about recognizing what kind of players are active that day, who's attending the auction, and for you to manage it accordingly, have the right expectations and trade with them, right? So on a day like today, which is a range day, you're going to have responsive participants. You're not going to have active participants, right? Responsive participants are at the edges looking for the return back to the mean. They play the edges. They're not playing the breakouts. The active participants are the ones that play the breakouts and fuel the moves higher. So with this kind of action, you can see each time we would get to the highs, sellers would exhaust. You'd find less sellers at each point, and then buyers would exhaust at the top, sellers would take over from there and rotate it back down to the bottom of the range. There were some really nice signals, like the second one. You can see that big liquidity just came in there and said, no, you're not going any higher. Also worked well with the standard deviation there, and we would just rotate back and forth. So that's really, and on the downside, I didn't really mark the downside as well, but you know, understanding exhaustion and volume signals has really stepped up my understanding of the markets, and Bookmap really shows it better than any other platform because you can, you know, in a 1 minute candle, a lot can happen, and going sub 1 minute can get noisy, but with Bookmap, you can see exactly each impulse. Is it higher volume? Is it lower volume? Is there new buyers? Is it new sellers? Or is the auction done at those levels and we're going to rotate lower?
Yeah, really, really nice description here and synopsis of what you're looking at. And I think the way that I kind of view it here is like you know, we had Slowdown so accurately or you know, articulately mention his progress and marking up charts here to begin with, and then refining that markup in here, and then you know, refining that into a strategy with very specific elements. And that's his trader evolution here. And in this one here, that's what you're kind of noting here, which is really nice, going from the transition from stocks over to futures and starting to notice things. And
if I may, Bruce, the example you show with slowdown, sorry, just what always stands out to me is, it does the opposite of what you expect it to do, right? On the left, example one, he's actually got the most amount of information, the most amount of markups when he's beginning, and you expect as you learn more, you're going to show more, you're going to have more to read, but it actually does the opposite. Each time he progresses, there's less information on the chart because he refines with the information that's pertinent for his setup, for his trade, what he's looking for. So it's just like you always learn, right? There's always all these indicators, all these things, but when you break it down and get it to the simplest level possible, that's when you can really start making money and being consistent, right? The change from 1 to 2 to 3, again, seeing each time less and less stuff just really stands out to me. Like I said, just to know, okay, it's not about catching everything that's on the chart. No, just what you see, what you pick up, and what's pertinent to your trade.
Yeah, that's right. That's exactly it. And that's what you got going here. So that's what it reminded me of. Was you're just starting to note these things, and you're also fitting this within. You're matching this with your bigger picture. You're expecting responsive sellers and buyers. You're not looking for those impulse strong moves to move and explore new areas for this day and this time. And then you're looking at the order flow to start to match what is kind of fits your outlook. And beautiful. I would say, like, there's a few other things maybe to consider. You noted the liquidity in here, at least in your walkthrough of the trade, which is great. It's also down in these areas here. One of the things that I haven't really, I've kind of struggled with a range bound strategy, just because it's not clear to me yet. So, for example, in here, look at how unclear that is. Like, I'm seeing sellers, I'm seeing back and forth. I'm seeing buyers. I'm seeing sellers. I'm seeing buyers. So it makes good sense that, you're kind of looking for something up here. You've got liquidity. You're looking for some exhaustion. You're looking for the sellers to start to come in. And you don't have clarity in direction. Therefore, you're looking for mean reversion or other side of the range bound type of trading. That's great, great observation. So, and it matched to what your outlook was for the day.
Yeah, and I agree, Bruce. Those are not easy to trade because, one thing's trading like a pullback in the sense of the trend, but here you're kind of trying to catch tops, right?
Yeah.
And it's like, okay, am I going to be the first one to the party and be right or be caught on the wrong side, right? Theoretically, it's simple because you know where your risk is, right? If it goes above this area, then okay, the buyers did come in. But yeah, for me personally, trying to catch those edges is always, mentally challenging.
Yeah, it's kind of you're looking for your outlook, or what your outlook for the day. You're looking for that to unfold, and you have maybe some ideas in here with exhaustion and absorption, previous swings, but it's really just a kind of a crapshoot of, like, I don't know, let's give it a shot, and it's a hard one. If you don't see criteria in here, well, that is criteria basically for that mean reversion. So I don't know, Crash. We can open up the mic for Crash, because he's got a way to deal with this. Yeah, he's responding in here as well. And you know, like what the way he's managing, this is where you can mix your outlook and what you do, or lack of, your criteria is lack of criteria, basically. I mean, you're kind of looking, you're saying, well, I don't see this, I don't see that, and then you're looking for that exhaustion or absorption, etc. But then, like with what Crash does is, you know, using market pulse as well. But you know, he's like, well, I'll get in a couple micros up here. I don't care. You know, it might go against me, but this is my outlook for the day. You know, maybe it goes with the trend that you're looking for. Whatever the case may be, at least get something on your side, and then trade a few micros to just give it a shot. And then once you get a little more follow through, maybe if there was like some big selling in here, I mean, they don't come in until here, really. You know, look for taking it down to, I don't know, where they came in here, or to the swing here. And you can add in maybe a little bit more, take some off. You know, you can add in a little bit more, take some off, etc. I don't know, Crash, if you had any kind of insights on that with your trade management.
Yeah, thanks, Bruce. Good afternoon, everybody. Great examples. You know, this is a good example of using a tool, right, to find the edges with the envelope that he's using there, and the dashed lines on the Bookmap page. You need a tool that you become familiar with that helps you, you know, in range bound trading, for example, in this particular example, to help find the edges. So it can be an envelope, it can be Bollinger Bands, Kelter Channel. It could be, I personally use ATRs, okay, similar to what Scott Pulcini does. And what I end up doing is I end up getting bracketed on the bottom and the top with ATRs. And then what I do is on my subchart, I have Market Pulse VPI all the time. And then sometimes Steven's actually asking this in the chat right now, how to use price change. Sometimes I'll just add Market Pulse VPI and price change, and I see the spikes, you know, together, helping identify those edges that I see on my ATRs. And then what I do is I do something similar to what Slowdown does. After I see a couple bounces and I realize that I'm in a range trade, right? You can draw a linear regression, you can draw a rectangle box. There's all kinds of tools you can use for technical analysis to help build it, but I personally build a rectangular box after I see a couple extremes, highs and lows. A lot of times what you see if you have a volume profile on your chart is you will see that point of control has migrated into the middle of that zone. So if you have a volume profile on there, that also helps you, because then you'll see the point of control in the middle of your bracketed highs and lows, or your envelope. And for the NQ particularly, when I note that I'm within about 20 points of the point of control, I know that I'm going to be range bound a little bit, because it acts like a magnet, right? That's the whole thing about point of control. So then I add sometimes price change to the VPI down there, and I will just use a combination of the VPI spikes and the price change spikes to identify the highs and the lows. If you are looking at this being at the top of, let's say, market highs, or if you do something like what I do with cycle rotations, and you know you're at a high rotation and now you're looking to move down towards a lower rotation, then what I do when I look at that rectangle box is when I see the highs bouncing off the top, for example, I will then short the price change and the market pulse VPI spikes at the top. I leg in, like let's just say I use 3 micros. After I hit 8 points down, I leg out 1. 10 points down, I leg out a second one. And then I let my third one be down at like 20 points. And sooner or later, I'm going to end up catching a move from my AM high to my AM low, for example, or get that Wyckoff spring out to where I catch that last runner to actually be a runner that might give me 20, 30 points on the NQ. Or you can just, leg all in, all out if you wanted to, but that's just my technique. So as every time, if I'm looking for a high to low, at the top of that rectangle box, at the top of my ATR on the top there, I leg in and then I just leg out every time it bounces down 8, 10, 15 points. And I can do that maybe, 5 to 10 times in a 15, 30-minute period while we're chopping around that point of control or whatever price that we're kind of stuck to. So that's just kind of my technique.
Yeah, great stuff. Thanks, Crash. I mean, like, the one of the things about market pulse, and I really like the price change in ATR, kind of kind of can sync together. But look at the spikes down here in the market pulse. Like, these don't happen that often, so one of the ways to to consider this tool in a range bound environment is you're up at the top of this range. You have your liquidity, you have your exhaustion, you have a spike like this in market pulse, and that these don't happen that often, and you're up at the top of the range. So you got a lot of things in here to say, like, well, yeah, I still see volume in here. It might break out. It might stop me out. It might come up to this liquidity level up here. Maybe, and then maybe I short it, or maybe I add to my short. But just to try to help put more edge on your side in a range bound environment. So just some considerations, like you were mentioning, Crash, about how to use some of these tools to look for more range bound, and that was really good good comments there. David, Stan, I don't know if you guys have any other kind of feedback on this.
Not a great deal to add. A great trade, great to see the post as well, and great comments off Crash as well. It's those levels and flows, isn't it, Bruce? It's picking. You've got those failures. I know it's easy always to trade the left-hand side of the chart, but at the end of the day, yesterday through that chop, as you say, you're looking for, is it going to break out? No, it's not. It's coming back down and being bold with those moves. I read a book many years ago by a guy a short book, I think, called Dennis Anderson, and he turned himself into a very successful trader just by trading, if I say, these extremes. Today was a great example. The price scooted down, it stopped, it did a 180 on yesterday's, I think that was, ETH low. That's it. So yeah. And that's part of the thing we've talked about, I think, over the weeks, Bruce. It's that sort of anticipation. You're trying to guess in an educated way where you think the market's going to go. So here it's scooting up and you think, okay, I'm looking for that short. And as Crash is talking about his trade management technique, great technique of getting in and getting out, you're anticipating what the move could be without being too bent out of shape and biased, and then you're looking for the chart to align with what you're expecting, and if it's expecting, in you go. Stan?
I think you cover quite everything, huh? To be 100% honest. Now I find very great. I'm much more about the order flow and trying to take advantage of the volume, but overall you already tell how you read it.
Yeah,
that's perfect.
I agree with you, Stan. Like, I find it a little challenging to look for a clear setup, and that gives me much more kind of, I don't know, just a better feeling instead of kind of a not knowing like what might happen here. It's more erratic, but that's where I just kind of I've been testing and kind of trying to come up with some range bound stuff for you guys, but it is kind of the lack of criteria that we're looking at within this range. But we do have some things to go over. It's just how do you manage that, and then Crash just talked about it. So
what I find funny too is that, I mean, this is ideally, like, if you were starting from scratch, knew nothing about trading, like this is what you'd want. You have a clear entry level, you have a clear exit level, but for some reason it's so hard to trade. But what you and Crash said it about, legging in, legging out, and like you mentioned, Bruce, using the micros, that I gotta use that as a big tool, right? If I'm not comfortable with the risk, that's what the micros are there for, and it allows me to manage risk, but still participate, gain confidence in myself, the strategy, and with how many times we traded this range, even with micros, 5 micros to take half a contract, this would add up very nicely, right?
Yeah, it adds up real quick. And it's like here. I mean, like my trading journal gives you uh, the results here. I mean, like look at all these little trades in here, little trades. It just keeps on adding, adding, adding. And I mean, I'm this looks like it's great, like good great equity curve, blah blah. However, look at the MFE, look at the MAE. you know uh, this is what you get when you get high profit ratios like this. Look at my average loss versus average win. That's why you see these big drawdowns like this, right? And but like you're saying though, these things add up pretty quickly. And you're pretty confident in your trade. You're like, yeah, this should, it's working, etc. I'll take the trade. But you got to be careful because this is like amateur hour here of like having a big loss like this, and or a big loss here. It should be the opposite. Have all these little cuts, little cuts, little cuts, big win. Little cuts, little cuts, little cuts, big win. And we want to see that this all flipped around in here. This should be at 40%, and this should be like 300. This should be 100. Something like that. I mean, you can see we're only trading one lot, two lots, kind of thing, but like it can add up. And anyway, this is the next level here. As we were saying, like you can get double your credit by showing trades in Bookmap, and then also using this trading journal. And we're going to start to go over trading journals now too. You guys will be able to share your trading journals, so you can pick a certain journal. Maybe it's Bookmap Academy. You'll be able to move your trades over to the Bookmap Academy trading journal, etc. And we can give you even better feedback. So looking forward to some of these new developments here. Yeah, good stuff. Thanks, Caesar. Let's go over another one of yours, though. I think. Where am I here? Okay. You've got some great content. So let's see. We've already gone like hour and like 17 minutes or so. You can see the two trades here. One was paper trading in Amazon, and the other one here. Caesar, which one would you like to cover? Maybe we'll just go over one, or if you quickly want to go over both of them, that's fine.
Yeah, let's look at the Amazon, because I think that one gave a really nice signal there.
Okay.
I went to paper trading here because I'm more focused on the futures trading. So, I'm not able to manage both with the mental capacity that I'd like to have on a full trade. So this was just, a nice pivot trade. My favorites. You can see the nice pop here. The absorption and exhaustion on Bookmap, right? The first test of that huge liquidity at 184 gets absorbed, and then you get a little push, but you can see how tiny it is comparatively. And then from there, each push is on lower volume. We find less and less buyers, and at some point the auction has to end, right? So we reverse. First target was the VWAP, and then I moved my stop to break even and got stopped out. But when you get these pivot levels with huge liquidity lining up like this, the the teacher I've had for pivot trading, same as a Valet fan, has been Thor Young. He's actually in the Discord room. He's a phenomenal trader. And with any system, he says it's good to it's imperative to have a where, a when, and a how, right? So the where is the pivots, and when is when you have activity at those pivots, when you have a signal, right? And then the how is your execution, your entry, stop, target, and all that, right? So, like he says, a pivot or a level isn't a level until it's tested and you see a reaction at that level. So on the bottom left here, you can see just a zoomed in view of what happened at the top there. And you can see, first impulse was on good, nice liquidity. And then the second one, there was still a decent amount of buyers, but there was some sellers in there that, we're going to take more than the initial amount of buyers to break through, right? And we just couldn't find them. The sellers kept adding uh, pressure to the downside on each pop. And eventually, that we just had to kind of reset and find new buyers before heading higher. So I think this is a really good example of, that where, when, and how. And then the ES trade, the SPY break even trade. Um, the one after that, let me pull it up on my end. Yeah. Yeah, so this one was it gave the signal I was looking for at a level of interest. We're at a pivot level, almost at it anyway. At my entry there was clearly a seller up there. We'd rejected it twice. And there was some larger sell liquidity above. So the first square box that I have marked on my entry, you can see again, similar to Amazon, where the first push on good volume gets absorbed, and then another weaker push higher, and we reverse. That was exact same entry signal, right? It would have been nice if it happened right at the red at the large liquidity above, but it happened at an area of interest with enough. It didn't happen in the middle of nowhere, right? And then from there, we just the auction wasn't to the downside. We found buyers, started building this distribution structure, this pennant, and eventually we broke higher as you started seeing there was buyers to be found in there, right? So, and there was obviously liquidity higher that we could trade into. So there's just, you can see I have my trend line there. I was looking for it to break, and when it didn't, I just cut it break even, because the closer you get to the edge of the pattern, the more likely it is to go the other way it's supposed to, right? So, or not in the way that you want it to. So when we couldn't break and kept making higher lows and seeing the buyers in Bookmap, that was enough for me to get out.
Yeah, nice stuff. I mean, like really like your auction market theory and experience there, and knowledge, and then matching that now with the order flow, and then your expectations with this. So really nice stuff.
There's just no better way to see it, Bruce. If you could just open it up for 1 second, that same one, and just looking again at each higher low we're making on that pattern. Look how the selling just dries up and it ends with a whimper, right? Like there's no other way you could see this other than Bookmap, right? Right in there, like just each time a little tiny red dot. Tell that is worth so much money right there, because I'm seeing the lack of sellers and enough for me to tell me this trade isn't going to turn out how you're expecting it to.
Yeah, they're telling you something, and it's really great. That's what the criteria is all about. Is like trying to understand what they're telling you. Now, this criteria in here with the volume and the price structure at this level of high, even though it's a lower high, it's building pressure in here. Now, maybe it comes up here, hits high liquidity, fails, and then does this. But the expectation for this is for more buyers. They're telling you in here, they're building a position. You are looking for this as the primary move. And if it does come up in here and then you're looking for a fade, well, wait for it to tell you something else. But yeah, I mean, here's your cup and handle, pattern right there.
I didn't even pick that up.
And you see the cup and handle. I mean, just to understand the cup and handle, like it's a very simple thing of like, usually you're in an uptrend, you get this pullback, you get a move, it fades again, but it still stays up in the highs. And then you're looking for buying pressure for that move to break out. So yeah, really nice in here, looking for this, seeing that in Bookmap, and then looking for those buyers, and then looking for that continuation to unfold. Another thing too is this in here. I think this is a takeaway, like you see again and again, and we can all use this one, is up here, like you had noted, high liquidity, lots of buying, but high liquidity. High liquidity here as well, high liquidity in here as well. But it is that double top in here. Here's the retest. Look at that. You know, is there buying pressure? No. It would be great if there was a big red dot down here before it did this move up here. There isn't, but you know, you guys get the idea. There's no liquidity and there's very little buying. Look for the sellers, look for the move lower. Now that's easy in hindsight, but let's take a look at it here and try to be objective. You might have seen it over here. Okay, here it is here. Same thing. Now where did it go? Well, it went down to the swing. You know, it went even a little bit lower to this swing down here. So I mean, you can look for that. Maybe this is your exit on your opening move or something like this. You know, if it can't go through, great. All right. Well, you know, I take my profit up here, or you know, probably somewhere in here, or you can fade it and look for. You're not looking for much, but you're just looking for, you know, kind of retest the swing, something like that, and then you can see it again in here. Same thing, right? Here, high liquidity, boom. Here's your retest, not much, right? Retest the swing, and the buyers do come back in, and then you got another one here. So yeah, just some things to check out for exiting your trade when you get that kind of double top and you do not see any interest. Is one thing, or you can also look for the fade if it's matching your criteria. David, Crash, Caesar, turn it over to you guys. Stan.
Thanks, Bruce. Thanks, Bruce. Lovely charting, really good charting, fella. So I love the context, and it's what we're talking about at the start of the call in terms of those zoomed out charts, just to give a feel of where the price action has been. You know, we could look at the last 30, 40, 50 minutes of ES up to the final close. Oh, it's all looking good. It's all, you know, BTD, but actually it's a down day. So that context really gives a flavor. And as I've talked about in the previous weeks, one thing I love about equities is this zigzag, Bruce. You really do get these moves between the levels. It doesn't mean you don't get spoofing out and liquidity gets pulled, as you said at the top there, but those zig moves, I find myself when I'm trading them, when you're in, you really do get a sense that, yeah, I'm on the right side of this. So good. Yeah, great chart. And Stan, Crash, please.
Yeah, I found great like this trade too. Maybe yeah, would just say like the execution. Like I don't know where exactly you would technically entering. Um, yeah. So yeah, execution. I think through Bookmap will help us to maybe give you more.
Understood. Thanks, Stan. You can see on the left where it has the red arrow on the Amazon chart on the left of the trading view. You can see the red arrow. That was my entry.
Yeah, perfect. Yeah,
And then
same.
the blue's the cover. So, you know, like Bruce was saying earlier, we have this phenomena happening at all these levels, right? But that comes back to the where. If you have this kind of, again, this exhaustion and absorption, is it happening at a level of interest? That's when you have a thesis for a trade, right? That's your where, your when, your how. If it's happening in the middle of nowhere, well then that
Yeah,
doesn't really follow a plan, right?
yeah. But perfect. If you have your setup, just do it. Make your structure. You will see. Huh? I think there is a lot of things that can work. Just your money management and Yeah, the consistency. Just do it.
Yeah, consistency is a key, right? So it makes a difference between the professionals and everyone else.
Totally agree.
Crash, I don't know if you had any comments on it. I'll follow up later with another one. But
No, I do. The only thing I like is what just I like to have as much confluence at those trade entries. So I like it that you're seeing liquidity, pivots, moving averages, icebergs popping out at the top or the bottom. So I like that. As much confluence as you can get, the better. That's the only real thing I have. On the other graph that you showed previously, the other thing I like to use Bookmap for is really looking at those ABC patterns. You kind of showed that little consolidation box there, right? I love to see the ABC pattern, if you want to call it that, impulse move up, consolidation, continuation of the trade. And you really see that well with Bookmap and the order flow because you can see it both just from the angle, the size of the dots, right? The liquidity zones with the dots. So seeing that order flow down there, that the highlighted area where you're bouncing off, right above it in the consolidation box. I mean, Bookmap just does so many amazing tools, and then you add the Market Pulse VPI for me on top of stuff like that. It's just it's a great tool.
yeah, great. Thanks, Crash. Let's see. I was going to a bit of feedback, kind of bigger picture. I really liked like I had commented, your auction market theory. Your knowledge there is very high. You know what this looks like and what you're looking for. I would suggest considering writing out your criteria checklist, and then now you know what you're looking for in that bigger picture, and then marking it in Bookmap, and then I very much echo Stan's comment on entry and exit. So it matches your criteria, and then you're looking for your you know exactly where to get in and get out and how to manage it.
Got it. That'll definitely do that, especially with this foray into futures trading. It'll be super helpful, and I'll definitely have that checklist. Thanks, Bruce.
Oh, excellent. Yeah, well, I don't want to take you away from stocks, but yeah, great stuff, and some really nice examples. So thank you.
Thank you, Bruce, and everyone else. These things, these reviews and this time you guys spent really encourage me and everyone else to keep posting, and it is so helpful. I really can't thank you guys enough.
Yeah, and again, I mean, guys, this is you're very welcome, and thank you. I mean, you're the one participating. I just wanted to mention, I mean, this is a pathway too. That you go from applying for the Bookmap Junior Academy to the Bookmap Junior Academy to becoming Academy member with getting Bookmap for free, and also add-ons for free, and then coaching, and giving back to the community, like David and Stan and Jack, and we'll bring on other coaches. And then that can lead to other opportunities as well. Not trying to dangle any carrots, we're just trying to say, like, hey, here's a pathway if you want. And I really like it. I like this community a lot. We're building something I think really nice and diverse, different than what others are doing. So I also had an assignment here for Slowdown, and Slowdown is in here. So I don't know if Slowdown, you would like to kind of walk us through a few and go through what you're looking at here in the fail, and also some of the lines on the chart that we had talked about it before, in the VWAP and the standard deviations, but perhaps you can articulate a little bit better what you've been kind of progressing toward. So yeah, I'm not sure if Slowdown has a mic. Anyway, we can start to look through this. Let's see. All right, he's got Trader Map Pro up here, and yeah, beauty here. High liquidity and stop pick above, and then this is your kind of Wyckoff trade. You've got down here. You've got your oh shoot, what is it here? To go back to this. Okay, yeah, and you ended up closing the trade for a small loss. So this is great. To go through like what worked, what didn't work, and you know, here's your short. This was your primary target, and here's your previous low of day, and you know, here's the kind of a move or shift away, and the move back here, and then this is your trade. You're looking for the fade and the move lower. So any kind of feedback in here, like with your Wyckoff strategy, I kind of mentioned this to you before, because it kind of goes back and forth between your spring, and is it a reversal or is it a going with the trend? And that can be kind of tricky, because we do see a little bit of like, okay, sellers. We don't have high liquidity in here. Here's your selling capitulation, and this was going to be a stop run here, most likely. And then we do see buyers starting to come back in. A little bit of buying in here in this pocket too. We don't have high liquidity though. So it does have a reversal kind of feel to it here. However, if you look at kind of a measured move in here, that move did complete. I mean, this would be kind of equal to this here. So anyway, slow down. Let's hear it from the horse's mouth.
Hello, can you hear me, Bruce?
Yes, welcome.
Hi. Yeah, this trade is just it's just a symbol looking for a level to continue to go lower. At this point in the day, I thought the odds of getting you know, moving a little lower and testing that liquidity outlined at the bottom of the screen were pretty high. And so I was just kind of looking at a bigger picture view of like, you know, are we going up, down, or sideways? And in my mind, we were going down. So I was just looking for an area that would make a lot of sense for me to try to get on that downward trajectory. So I thought the structure that was created previously, combined with the liquidity and the fact that it was the prior day's low and today's point of control, just made it like worth putting the risk on. And you know, I got more than 1-to-1 out of it, but I didn't trim my profits. I was holding for a target, so I ended up kind of watching it. You'll see in the second slide, it kind of it went down a fair bit, and then it turned around and went higher before ultimately making that that lower move, you know, maybe an hour later in the day or something like that. But it was just, I wouldn't necessarily call this, you know, the same spring setup that I'm often tracking. This was just more, you know, identifying it that I felt it was more likely to go lower than higher, and then just looking for a logical area to participate, and then also just kind of checking out Trader Map Pro again, and you know, that kind of thing.
Yeah, no, great. I mean, I love the logic and critical thinking, and love that you know, you're also showing like, well, it started to work for you, but you ended up with a small loss. This is the risk. This is, I mean, there's always risk. And I mean, if you look at this here, it still looks great. I mean, high liquidity, you know, trades up into this area here, just above, hit some stops, and then trade back down and like you said, here's your big target. Here's your shift
Yeah.
away. It all makes good sense, and yet, it did it hours later.
Yeah, and I mean, just looking at that chart, I would take that trade again now, knowing what I knew. And at the time, we never know if it's a reversal or if it's just a pullback. But yeah, I felt good about it, and I waited for it. I watched that. I watched the buyers kind of bring us back up to that level for, I don't know, it took half an hour or something. So I was patient and prepared, and then when I executed, I was like, this is something I can get behind. So the fact it didn't work, it's just one of many trades.
Yeah. Great. I mean, I really like it, and that also the that this is part of trading. Like it was a small loss. You had your criteria, and you stuck with it. And I especially like the way that you had mentioned. Here you can see these kinds of shifts away, and then just capped by high liquidity in here, and like you said, bigger structure here, previous low a day, and then here's your stop pick back up above, looking for this, and for all of that criteria in here, it looks pretty high probability it'll work. The I guess you have another image. It would be really good to see that confirmation of sell volume here starting to come back in, and then move that lower. But else, like, I don't have any other comments. Open it up to Stan and David.
Not a great deal, Bruce. You say it does look like a great setup. So well done. And the 5251 area, that's building. The liquidity is building there. It's shown a traction that's where it's going to go. Makes perfect sense. Maybe that, again, easy to be captured in hindsight on the left side of the chart, but the liquidity levels above where you got in seem a little bit mixed. They seem to be jumping around a bit, but that could just be filtration. But sure, that certainly would have been a trade I myself would have been thinking, yeah, like we've said on some of the charts a bit earlier on, we're anticipating where that reversal, that 180 can be, and that's a 180 point that you're looking for. Agreed. But as Bruce said, they don't all work out, as we sadly all know.
Yeah. Stan.
No, I would say as you, Bruce, potentially just more selling cluster and more relative volume in your favor to go in. But if it's your setup, jump in. But I would just say that more seller dots and relative volume, as you always mention in your week of spring. So
Yeah. I mean, here's the second image, and God, it didn't even test this swing. It kind of went below this one a couple of times, and that's about it. And then pretty strong buying all of a sudden pops in, and you close the trade up here, take your small loss. Awesome. I love it. And look for the next one. It's like you said though, Stan and slow down. I mean, like, it would be great to see like some big selling in here. Here's beautiful exhaustion, just beautiful, and we just don't quite. It's a little fight back and forth in here. Yeah, okay, yeah. I mean, they're selling in here, and it did it down to here. I'm surprised it just couldn't even get down to here. And there's some liquidity down here too. You just couldn't do it. And someone wanted to start buying, and they did, and raised it up higher. So that's trading. Part of the gig. Way to reduce the risk. Okay. I don't know if see Stan or Crash and Caesar, if you guys have any additional comments you see here.
I just
No,
like the previous. Oh, sorry, Caesar.
go ahead, Crash. Go ahead.
I just like that previous slide that you showed, the confluence that Slowdown has on there. Confluence, confluence, confluence. Look, he has a retest of structure. He has a point of control. He has liquidity, and he has a prior low of the day. Know your structures before you take trades, right? Know the open highs, lows, close. Know where structure is at, and use Bookmap to help you find that confluence.
Yeah, excellent.
Yeah, I was just gonna say the Slowdown always has some of the best order flow analysis up there, and the way he presents it's just so clear. He's one of the biggest helps going through his stuff when I first joined, and as I continue to learn and get more familiar with futures and Bookmap. And yeah, on the other slide where it just turns around right ahead of his target, it's nice to see that it doesn't just happen to me. So my commiserations, Slowdown.
I assure
They're
you,
out
you're
to
not
get
the
us.
only one. Yeah.
Yeah, there's and you know, I like what you said, Slowdown. Like, would you take it again? Like, you know, what would keep you away from this? Like, maybe there's a little bit of leap of faith in here with the volume, but like, God, it traded high liquidity. It's above the swing. Everything's looking good here. It's done a measured move. You're just looking for maybe a little distribution here, and then the follow through. Instead, it kind of flags and then continues.
Yeah. The only other thing I'll add is I was playing a little bit of a wider range here. So my original stop was going to be up in, it was 73.50-ish. So it was above the upper band of liquidity and the iceberg. And my initial target was about 1.5 to 1. And then I was planning to hold the runner for lower. So I was kind of playing the long game on this trade. So I wasn't, and then I moved my stop nice and tight to where I exited there after after we got close to the target and saw the reaction. So I was originally like, I was planning to sit in this trade for, I was hoping for half an hour, 45 minutes, however long it took to wiggle its way back down there. I had confidence in the location, and I thought it was worth, taking a slightly larger swing in terms of distance traveled. So that's why I wasn't like as concerned about the immediate reaction to volume. But it's a very, you'll notice actually, after I finished marking up the first screenshot, I realized that my volume delta bars on the TraderMap Pro were still pretty minimized. So my volume delta bars are cranked up on the second slide, but not the first slide, because I was kind of thinking the same thing. Like, maybe I could have seen a little more sell volume on the actual entry there, but I still think it was something I can get behind.
Yeah. And this is like, so as you're progressing, Slowdown, like a kind of a question to you about this, like, the exit, I think on this was really good, because this is telling you something. You're just like, okay, I'm getting out of the way. Take the loss, even though because it probably, I don't know, it probably would have hit your stop if your stop was up at the 73.50 up here. I don't know if it did or not. This is where I think it can be, and for me personally, and I'd like to hear from you, and all of you guys here, this is it hurts. Okay, even though it's a small loss, but now can you move and like drop the ego, take the small loss and go, you know what, I still believe in this, but I'm looking for something up here now. I'm going to take the loss. I'm going to look for something up here. Maybe I'll get like a double top up here. I see exhaustion up here into high liquidity. I do see that selling cluster here. I do see the selling coming in here. Now I'm going to take it and look for this.
That's pretty much exactly what happened. The same type of setup presented itself above that level, where the and to the left on that shot, you'll see that large green absorption bubble. There was like an 8,000 icebergs go off this morning, right in that area that the liquidity was added back to. And once we did break above that, that was kind of it for the day. We extended maybe, 2-3 points, if I can remember correctly, and then it was all down from there. So I just applied the exact same idea at a slightly different level. And I ended up actually doing really well on the big flush out this afternoon.
Nice.
Essentially taking the same trade at a slightly different location, and caught that big violent thrust downwards, and ended up doing pretty well today.
Nice, really nice, really great to hear. I mean, like, I find like that is hard because like you know, a lot of times you kind of like, well, you know, I'm waiting for it up here. You know, my stop is up here. But this is saying I'm out. I'm going to take the small loss, reduce the risk, and then I'll look for something up here. And that can be challenging, you know, mentally to like, okay, you know, and look for the next thing up here, and that's what you did, and then you nailed it. So the I don't know. That's more of kind of trader psychology, I guess. But it can be challenging to get. I think that's a nice evolution. I don't know if you have any comments on that, or how you got to that point. Slow down.
Well, I mean, one thing I will say about that is like, only in a very specific setup have I started putting my stop so incredibly tight. You know, like you always hear people say like, oh, you know, 2 ticks outside of structure, 3 ticks outside of structure. And then I found that I just kept getting like ticked out, and then the move would go in my direction. And that's when I would start getting frustrated. And that's when I would start getting, you know, like I'd be losing longs on an uptrend, just getting ticked out and ticked out and ticked out. And then I started realizing, I was like, how am I supposed to know which one of these is the actual final structure?
Yeah.
And so I started taking a slightly wider stop with a slightly wider target, and just allowing it more wiggle room. And, you know, people always make that analogy like, well, I'm a sniper, you know, I sit in the bushes and I wait and I hunt. And it's like, man, maybe I'm not a sniper, you know, maybe my brush is a little wider when I paint, like maybe I want to be a little more relaxed. So really, to get over the re-entry process, I just widened my stop a bit. And then all of a sudden I wasn't out of a trade in 20 or 30 seconds. And it gives me a few minutes to kind of, you know, read into things, see how they're going, and just reduce your share size if you wanted to try something like that. So you can risk the same like dollar value. And then I started to kind of give myself a little more room for error, and started having a lot more success. Started noticing I was more relaxed. And I think that's what gives me the confidence to now get back in, because I'm not getting back in 3 or 4 times. I'm taking maybe 1 shot at it again. And, you know, it took me quite a while to get there, to kind of widen a little bit. But, you know, like people talk about ATRs and stuff. Like when I say widen, you know, I'm still 3-4 points most of the time in the ES, or 15 to 20 points in the NQ. So it's not like, not huge swings, but allowing it a little bit of room to breathe, and kind of, you know, you get a little bit more time to interpret the information that's coming after your entry. I think it was David who said, like, you know, we're all pros at trading the left side of the chart. You know, and I found when I took a slightly wider stop, it allowed me to kind of process the information that was coming in on the right side of the chart after I entered, to make sure it was something I was still, you know, interested in pursuing. But
Wow,
does that make any sense?
yeah. Oh, totally. I mean, but there's a little bit of like, not hypocrisy, but like, you know, you widen your stop out, but you cut the trade here.
Based on the information that came in when we missed that final target, right? Like,
Right.
if you look just, I'm not sure what the time slice is, but yeah, right where you've selected, at that point, I think I hit a home run. Right? At that point, I think not only is it going to hit my first target, but I think chances are it's going to go all the way down to that liquidity.
Yeah.
And I'm sitting here thinking like, oh, I'm a genius. Nailed it. You know, and then price goes skyrocketing up so quickly, it recovers that whole move. And then all of a sudden, now I'm looking at that iceberg liquidity area 72 level from prior in the day. And I think, well, chances are it's probably going to get up there, and I can now just get back in at the top. So how'd I put my stop there originally? You know, that's probably where I would have put it, maybe a year ago or 6 months ago even. And I would have been willing to take another stab at it had it just ticked me out.
Mm.
But taking, like, again, it's not that wide for the most part. It's often, yeah, within kind of 3 to 5 points is the comfort zone, but it all depends about my target. So if my target is beyond 1 to 1, I'm now more comfortable taking that wider stop and just letting it work. Like, at some point, I think I had to kind of come to the conclusion that, um, maybe it's my skill level, but like allowing a little bit of breathing room like really helped my psychology, and actually just watching the chart, I don't feel like I'm on edge. Like, like some people, they say like you need 100% extreme focus to trade, and I actually found that like when I was able to kind of dial back a little bit and had some music on and was just a little calmer about the whole process, then I became more patient. And like, it's all great when we get that very top tick, but a lot of the times you'll get an entry, it'll come back up to around where you entered, might go a tick or two higher or 3 ticks higher, it'll come back down and wiggle around. And I kind of was chatting with my brother and thinking like, how do I make this more relaxing? And then just sat back and I was like, well, if price is going to move 30-40 ticks a day in the ES, like, taking a 1.5 point or 2 point stop is pretty, like, you're asking a lot out of yourself and you're asking a lot out of the market. You need to be right instantly. And that works sometimes, and it works for certain trade setups. And like a lot of the time, the straight spring I post, I have a much tighter stop because that trade is so well defined in my mind that if it doesn't work immediately, it doesn't work. Whereas this is more trying to catch a larger move to the downside. So it's like more of a momentum entry, at least in my mind when I took it.
Mm.
And so, I'm trying to get, the second target is approximately 12 or 13 points. And so anything over 10 for me, I consider a large swing if I'm trying to get something over 10 points. And my trading in the last like several months has really improved, and the results have really improved, and my patience has improved, and most importantly, like my attitude while I'm sitting at the computer by myself has like really kind of, I don't know, it just seems easier.
Love it. Love
For
it.
me, yeah.
Love
And of
it.
course, we're all so different, right? I used to stress that every time.
Yeah.
Like, everyone is so different that if taking a 4 or 5 point stop isn't for you, that's understandable. Like, I don't want to lose that money. I don't want to risk it, but I also want to be successful. So I'm willing to do whatever it takes to be successful. And I maybe if I was a more experienced trader, I would be able to, to be that sniper in the bush. But I tried for quite a while. And
I love that. If I chip in, I love the analogy, the comparison there. And it's fine. I think I would have said it before as a golf analogy. I appreciate not everyone plays golf, and a lot of people hate golf, but we play our own way down the fairway. We spray our own way to the left and the right, but we're still playing golf and enjoying it. And that's what you're rightly reminding us all about here. You're not going to get the Barrett out of the rifle cabinet and go hunting. You're going to get out your Benelli, you're going to get out your 12 gauge shotgun and go turkey shooting. But you're still going to go hunting with me. That's the thing. Perfect. Love it, Bruce.
Yeah, really, really nice. Like, this is where we were, slow down. We were talking like, I don't know, the past like couple of months about moving into, we're talking about our criteria and our setup, but we're talking about trade management. This is such an important part. And to learn from that, and what you just kind of went through was like, this is a big leap to be able to say like, hey, this is not my setup. I'm cutting it. I'm going to just be relaxed and look for this other thing to happen. And then I'll trade that. You're relaxed about it. You found a way that not only with your setup, but your trade management that is in line with what works for you.
Yeah, I think, and I'm willing to adjust the, that stop and target based on what type of setup it is. So, like I said, the spring setup that I post frequently, that has a defined and a tight stop. If I'm trying to catch a momentum or what I think is going to be a trend, then I'm willing to kind of widen things up and give myself a bit of room for error.
Yeah, great. I mean, that's it brings up another question though about sizing, like how much risk do you want to put on for some of that? If you're going to widen out the stops, well, you might have one. If it's, I don't know how are you working with your sizing?
Well, for the most part, I trade micros, so it's not something I'm too concerned about. And the reason I trade micros is like I don't have a large enough account to be taking, large ES positions. So I mostly trade micros in the NQ and the ES. So, and the fact is that when I started widening my stop, I actually started taking less actual trades. And sure, you're not going to have as many times where you get an 8-to-1 or a 10-to-1 return ratio, but my win rate went up. And so it was kind of enough confidence in me there. But, I don't trade, I don't risk thousands of dollars per trade. I also don't lose thousands of dollars a day. So it's, it's up to, I'd say to the individual what they're willing to accept. But I had a conversation with somebody recently, and they're like, "Oh, well, yeah, 5-point stop loss is fine for the micros, but it's not fine for the minis." And it's like, well, it travels the same. If it's not right for you, that's a different story. But taking 2 or 3 swings at it versus one, realistic go. So I feel like, if again, I'm not a big player in these markets at all. I'm just working on my craft and trying to pack away a few $100 here and there, and
No, but
just find
you will be, and so
yeah, that's exactly it. I'm here for the long run, so I'm not in a hurry, and I've seen so much progress in my own trading and my own results that I'm confident that you can't always risk what you want to risk, because Scott Pulcini always says that it's like I only want to risk $20. It's like, well, then maybe this isn't the market for you, because right now the ATR is X, and the chances of you getting ticked out are higher than you actually hitting your target. So at some point we got to get real with ourselves, and if you're risking too much, just drop down to the micros and go through the exercises.
yeah, I mean, I think where I understand your answer. What I'm getting at is, so if you're trading multiple micros with your Wyckoff spring, you know exactly what you're looking for and exactly what you're risking. Maybe you're trading like 3 micros, and then that would be like, quickly it would move down to where you want to go, or what you're looking or anticipating due to your setup and your studying. That's your edge. And this one here, maybe you just risk 1, because like this loss up to here would be equal to your spring. Like, let's suppose this was your spring here. It would be equal to that amount with 3, something like that.
Yeah, and the number's arbitrary, right? Whether I trade 3, 4, 5, 6, 7, it doesn't really matter. But you're right. You take a different size. So I used to have a standard 5-lot entry. Then I went down to 4, and then now I kind of just adjust it based on how wide that stop's going to be. So but I can't really stress like how much my mindset changed when I didn't force myself to have that absolute precision, especially on like a momentum or a trend setup. Now, of course, this didn't end up being a trend setup, but at the time, that's kind of what I was thinking. We had the big sell-off in the overnight. We weren't getting any acceptance back inside the previous range right out of the open. We had all that iceberg. So my mind was just like, this thing's going short. And how do I catch the most of it?
Yeah.
But
yeah, great stuff. So I don't know if David, Stan, Caesar, Crash, you guys have any other comments? Open the floor.
No, that was a great conversation.
Yeah, echo that. Yeah, no, good stuff. Great share, Slow down. Thank you.
Yeah, good stuff. Thanks, Slow down.
Yeah, fantastic. And again, seeing the what's really a professional approach of, okay, I don't care. I'm not going to let my ego get in the way. Like you said, Bruce, I'm cutting the trade here. And even you could see just quickly on the analysis, each push at that level, you could see there was, small volume dots. This push, without seeing what happened after, there was large volume. So you just move on to the next trade, right?
yeah, and I mean, if you're not risking too much, then it's a lot easier to move on. Like I said, I don't have tens of thousands of dollars to lose next week. So, I'm in a mindset where, like, if I'm going to lose the trade, it's not going to affect me from a financial standpoint. Like, it's not going to make or break me. I'm trying to be here to trade the next day. And, like I said, I ended up riding today. I did really well this afternoon and got some really big returns. And, I was actually making lunch when one of the giant impulses kind of tagged my final profit target. And I just heard the little notification go off, and like I was, standing at a stove, and felt pretty awesome. But they don't always work out that way.
Pool party. Yeah.
One day, yeah. I think I need to move up to the minis before we're having pool parties. But
No, it's a good place to start. If I go sideways, Bruce, and I will have said this again before, I was saying to Laura or chatting with Laura about, it's that building that confidence in your setups, your mindset, as you rightly talk about your processes and so forth. And us European traders that have access to CFDs, you can have those Pico things that it's literally cents. And trade goes the wrong way, and you just massive wide stops. You can lose $5 or something like that, to allow you to really settle into trading with real money. Those baby steps towards building up, as Bruce has said. So well done.
Yeah, I mean, I just have one. I kind of want to just end it there. But there's one more comment I wanted to make, and I love this conversation and opening up to you guys and hearing you all. I don't want to have the last word, but what I think I find from my experience, what has been important is to trade a lot. The more and more I trade, and it doesn't have to be live. It can be sim as well. But you're experiencing, use the replay mode. The more that I trade, the more you kind of like figure out, oh, I don't have to trade a lot later. And that's kind of where you have landed. Slow down. You used to trade a lot more. Now you're trading less. You know what you're looking for. You don't feel like you have to always be in a trade and pull the trigger. And that's a very mature way of progressing, or it's a maturity that I burned through that part. I don't need to trade anymore. I know what I kind of know what I'm looking for, and I'm relaxed about it.
yeah, death by 1,000 commissions. For me, anyways, the commissions were what motivated me to try to find a way to trade a little bit less, and it just kind of doubled into working well for my personality as well.
Yeah. Great stuff, guys. Thank you so much, everybody, all the coaches, all the guests, all the great content. If there's no other comments in here, we'll end it up on this.
I might.
Really good,
maybe,
Bruce. We're going to change the format you mentioned. I don't know if you've got a moment just to say that. We're going to mix it up a bit, aren't we, to make it more like this, I think, Bruce, if we wrap.
Yeah, I mean, I think a few things, but Stan, you were talking?
Yeah, but you can go over if you want. I was just maybe mentioning like I like the way how you decide to just take number contract about the stop. I think we should never think about money, but the percentage about the capital, and that's a great thing. Like adjusting your position uh, with your stop.
So you mean in terms of risking the same amount on
Yeah,
each trade?
exactly.
Okay.
Yeah, exactly. And obviously, if you win, you will scale in. You will you will have the potential to add more. And yeah, if it doesn't go in your favor, you will lower your risk. Lower your contract.
Yeah.
But I think it should be part of every plans. Uh, the percentage that you are willing to lose, and money will arrive after.
Yeah, I like it. Great comment, Stan. Just you know what, guys, I think we'll end it on that. We'll talk more about we'll kind of change up the process a little bit more, but it'll be better for everybody. You guys that are constantly here, we've given a lot of attention to a lot of you guys. You've gotten a lot of good feedback, but you're here week in and week out, and we went over some trades that and no one was in here on the other side of the mic. That's a big part of what we're looking for here. So we'll have to, if they're not in here, we're going to move on, and that's that. I would like to go that direction anyway, because you guys are doing the work, and you're here. So let's open the mic and take it from there. If no other comments, we'll wrap it up, guys. I know it's over 2 hours now. But great conversation, good stuff from everybody, and thanks, Slow Down, at the end there, and a great conversation on trade management, risk management, and etc.
Yeah, thank you,
Perfect.
everyone.
Perfect. Cheers, guys. Have a great weekend when it comes, and great trading tomorrow.
Excellent.
Bye.
Thank you, everybody.
Thanks, Bruce. Take care. Cheers.
Bye-bye.
Bye. Bye. Bye.